Hello, investors. Welcome to episode 1 of Warren Biscuit's $100,000 investment portfolio challenge. This is episode 1, the first $43,289.70. To give an overview of this video series, the goal of the challenge is to build a portfolio of investments with $100,000 of initial capital using equities, options, and foreign exchange. I'll be implementing short-term and long-term strategies to provide positive cash flow and a source of active and passive income. I work as a software developer, so I'll be showing how I manage my investments while maintaining a full-time job. The portfolio will be benchmarked to the S&P 500, and I'll be tracking my month-to-month performance against the index. These are just a few of the strategies that I'll be employing in this portfolio. I use both active and passive strategies to generate income. And as a software developer, I've developed a couple different algorithms to quantify my positions and their performance. And I also employ kind of a classic qualitative analysis of all the financial instruments involved. I'll quickly go through the main strategies here, but I plan on releasing a related video series detailing each of the strategies and how they fit within the portfolio. The main strategies employed in the equity side of my portfolio are value investing, dividend growth investing, and momentum swing trading. For options, I employ theta decay credit spreads, earnings trades, including Ivy Crush and directional spreads, momentum spreads, naked put selling in indexes, and low IV straddles. I highly recommend researching any of these topics that you don't understand just yet, but I'll be releasing detailed videos on how these strategies work and how to analyze the risks and rewards from any single strategy. With that being said, let's jump straight into performance. I'm going to be covering January and February in this video, but moving forward, I'll be releasing monthly and possibly weekly updates. In January, we saw the portfolio increase in value by a little bit over 1%, while the S&P 500 lost 0.16%. It's pretty early on, but we're already outperforming our benchmark. We established and carried over 41 different equity positions while employing a little bit under $42,000 of capital. I like to keep about 40 to 50% of the portfolio in cash to account for option margin, and the majority of the remaining capital is used to establish equity that pays out cash in the form of dividends, which gives us another form of cash flow. You can see a portion of my equity portfolio in the screenshot that I captured here, but I'll be releasing a video next week which will contain a link to my entire equity portfolio. It's a little bit more difficult to track my options positions due to the frequency and complexity of tracking the different strike prices, but I'm working on a way to track them and share them on YouTube in the future. In February, the portfolio returned 6.18%, while the S&P 500 lost 8.41%. This brought the total return of the portfolio to 7.23% and the net liquid value to $107,005.89 after fees. No new equity positions were established this month, but 22 options positions were taken. That option position number doesn't take into account any closed positions from the previous month. I think that visualizing these returns are always fun, and while there aren't a lot of data points, I thought I would graph these performance metrics. I'm recording the video near the end of March, so I'll also preview the returns into March to give us a few more data points. The first graph on the left is a bar chart of the monthly returns of the portfolio based on initial capital. So the 100K portfolio returned 1.05% in January, 6.18% in February, and while March isn't over, the portfolio has returned 6.20% so far. In that same time frame, the S&P 500 returned negative 0.16% in January, negative 8.41% in February, and is currently down negative 14.31% in March. Monthly performance is particularly important to me because I want this portfolio to generate consistent income, and we're solidly outperforming based on this metric. It's also good to see some initial consistency in returns, even though it's a fairly small data set. The second graph on the right is total performance, or total net liquidity of the portfolio relative to the S&P 500. The portfolio is currently up 13.43% with the S&P 500 down negative 21.34% in the same time frame. It's a pretty small data set so far, but we're solidly outperforming our benchmark, and consistency in that graph is also good to see. This data set matches my strategy's previous performance, so I think the keyword here is consistency. This is a breakdown of the performance of each slice in my book. Equities are down a little over $3,000, representing 3.29% of the portfolio. The equity slice of the portfolio is actually underperforming the S&P 500, so I'm going to take a look at rebalancing the portfolio pretty soon. I'll be releasing a video regarding future rebalancing using something called tax loss harvesting, and how I exit underperforming positions to save money on my taxes. The equity loss here is also unrealized, so tracking this performance is a little bit less relevant, but something that I consider important to track. The option slice on the right, however, gained $10,000, a little bit over $10,000, and that represents 10.52% of the portfolio. I've added some top and bottom performers in each section, but I hope in future videos to give a little bit more clarity on each individual position in the slice and its return or its performance. This next slide is probably the most important for me and one that I think is really undervalued in investment portfolios, and that's cash flow. When you analyze a company, looking at its cash flow, whether negative or positive, is really important in qualitative analysis, and it's a consideration that I make in my own portfolio. When you're analyzing a company's cash flow, you're thinking about where that cash flow is going, whether it's positive or negative. Even a company with negative cash flow can be a good investment, but overall, you're usually looking for a growing positive cash flow. For this portfolio, I'm hoping to generate consistent income, so positive cash flow is of particular importance to me. The main sources of cash flow are dividends and option premium. If those concepts aren't clear, look it up, but I'll be releasing more in-depth videos and how I achieve that specific cash flow. For the months of January and February, I received $178.91 in dividend payments and $10,527.63 in option premium. It's important to note that this is realized gains, meaning that this is cash that dividend-paying companies paid me, or in the case of option premium, other investors paid me to sell them options. That brings our net income to $10,706.54 for the first 2 months of 2020. In this next slide, I have projections for total net liquidity for the rest of 2020. I've modeled out a couple projections for different account scenarios. The blue line represents the actual return of the portfolio. So we have January and February kind of locked in at this point. The orange line represents projected value of net liquidity based on maintaining the $100,000 of initial capital. And the green line represents returns based on additional deposits that I'll make into my brokerage account to reach $175,000. That number is important because it represents the amount that I need to be approved for portfolio margin, which would really increase our leverage. That means that there's the potential to gain more or lose more. Hopefully in our case, obviously, gain more returns. I project that with additional deposits each month, we should reach portfolio margin status in September, which is why you see a larger divergence in projected returns at that month. These models are working with incomplete data, so it's really just for fun. I'm not holding myself to these returns, but I think it'll be interesting to see how actual performance measures against my projections at the beginning of the year. So that covers the portfolio performance so far. A couple points I'll be considering moving forward. Obviously, current market conditions in the first quarter of 2020 have been really volatile, and one of the investment philosophies is to consider risk over reward. So we'll continue to protect our downside while maintaining positive cash flow. And given the recent market downturn, I'll be doing some rebalancing of the equity slice, and I'll show you how I save money on taxes using tax loss harvesting while increasing holdings in companies with solid dividend payouts and upside. A major goal of this year is to get to portfolio margin, so I'll be making additional deposits to reach that $175,000 net liquidity mark. And finally, transparency and strategy. I'm planning on additional videos regarding the strategies and algorithms that I use to build my portfolio and plan my investments. I'll be releasing videos consistently, starting with the first quarter review of the portfolio next week, so make sure to like and subscribe for future updates.